with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and hit the notification bell. That way you're notified whenever we release a new video. We do put out new videos every night throughout the week and once on the weekend. So make sure you've hit the subscribe button and the notification bell. Make sure you follow us on X if you're on X at Bullish Chips, where we provide real-time updates about entries and exits for scalps and day trades throughout the day, as well as entries and exits on mid and long-term swing trades as well. We also provide additional commentary just about the market overall, more specific things like the internals for QQQ and just other notes about SOXL price action that might help out in the day's trade. If you like today's video, make sure you hit the like button. It really helps the channel grow and help to teach more people out there about the advantages that SOXL provides when trying to use kind of the least amount of money to make the most amount of return in a safe way. So make sure you hit the like button. If you're not familiar with our color coding system that we have for our charts, make sure you look in the description of the video for our bonus content about how we set up our charts for just the basics, as well as how we set them up for precision intraday trading. So make sure you check those out. Just as a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view of SOXL's price action, not only in the current day, but in the past, as well as where we believe price action is going to take us in the future. So just make sure that you take into account your own risk profile, financial situation, and things of that nature to make sure that you're making your own trades. We just want to provide some educational information and things that can help benefit you along with your other research that you've done. So let's get into the charts. That's what the video is really about. Again, if you're not familiar with the color coding system, check out the links in the description to how we set up our charts. But let's look at the day. Today here, we've got a 3 on the day. Again, if you're not familiar with our trading system, we do use the strat as the base of our trading system. It's not the end-all be-all of our trading system, but it is the base of it. If you're not familiar with the strat, there's links to this in the description of this video to Rob Smith's YouTube page. Rob Smith, rest in peace, was the inventor of the strat, so make sure you go out and check his page. He has a wealth of videos out there, and do your research on Rob. There's plenty of information about him on the internet. So back to the charts. We do have a green 3 today, or in other words, an engulfing candle, a bearish engulfing candle. We can again still see in play the year flip, the 2813, which we've rejected off of 3 to 4 or 5 times here now. We have the range that we've been in for 3 or 4 weeks, topping out at the 23 and bottoming around the 24 range. We did get the peak below on Friday, but it did, hammer up in a sense. We still had a pretty big wick on top, but it closed green. And yesterday, although there was pretty muted price action intraday, it did move up, and we did have a green candle. So, it was showing progress, like it had done a look below and fail, or just pushed below the bottom of the range for a quick peak and possibly moving back to the top of the range. Again, possibly getting back to this 2813, which is the year flip, which also coincided with this weekly broadening formation that we've had out here. But today was a different story, right? We got a gap up. So we can see today's open up here was higher than yesterday's close, higher than all of yesterday's action. So we gapped up, did explore price to the upside for a brief moment, and then if you watched price action today, but if you didn't watch it, and that's what you're here for, the bottom kind of fell out there. So that the bottom falling out did align with PMI. So we have to take that into account. You definitely need to make sure that you have stops on any type of calls that you had, knowing the economic numbers are being released around that time. We got stopped out, no big deal. It's better to break even, which we did in this case, or even just take a slight loss, than to take a big loss just because you think we're going to go back to the top of the range. As well as the year flip and the weekly broadening formation. We've been preaching for weeks about this monthly downtrend line, which is the green dash line, which seems for now to be holding. The 50-day moving average, this green line, is below the 200-day moving average on the day chart, and price action looks like it's trying to see if it can press below. If we do get more price action to the downside tomorrow and break to the downside, we're looking probably to, hopefully, if you're buying puts, to get this gap close. But we could just make a higher low here. We have a 3 on the day, so if you're familiar with the channel, one of my favorite strats is a 3, 2 down, 2 up. You have very defined entries and exits, and usually a pretty good amount of magnitude. So tomorrow, while I will be initially looking for puts, also let's bring into account that AMD is down 6%, $11 after hours, at 163.25 basically. So that's going to weigh pretty heavily on SOXL tomorrow. AMD reported earnings. SMCI reported earnings as well after hours, and it was down like 10%. So chip sector not looking very strong. We do have some puts that we bought at the top of the range almost 2 weeks ago now, that came back to life on Friday, and still remain alive now. We've taken a little bit of a theta hit, but as one of the things I preach about SOXL on this channel is the very low theta that you can get on these contracts, especially if you're buying at the money or in the money and with plenty of time. Of course, our contracts don't expire till next week, and so we're not getting hit too much by the theta bug right now. We're still in play with those puts, especially if it wants to continue to push down, especially to close the gap. If we close the gap, we've got our first support area around the 20 to 22, maybe 21 to 22 range, right? The top of this range, the bottom of this range. So that's like 2086, yeah, like 21 to 22, yeah, 2250 or so. We can see over here, resistance was 2150-ish, support was 1950-ish. So, we've got a zone that we could come down and chop in again. If you remember, this is the June 13th Monday gap up and go that we had. So, that would clean things up from here. At that point, we're looking at the week to see if we're going to make a lower low, right? So come on, work with me here, think or swim. So if we, break through the gap, if we close the gap and continue down, we look to breach the bottom of this 3, which again, we've already breached the top. We've seen 50% of that 3, which gives us a pretty high percentage that the bottom is 3 will be breached. If we continue lower, who knows? Maybe it doesn't even get breached, but we just make a higher low here. But at this point, that's what we're looking at on the week chart. Can we create a higher low here? If we can't create a higher low here, we're probably going to test this weekly uptrend line from the original April 7th bounce, right? Could this gap down here get filled? With the wick down through this uptrend line, possibly. Again, we don't put a lot of weight in uptrend lines. We look more horizontal lines and gaps, especially in this case, which is a double gap from over here and over here. Actually, oh yeah, this is a week. So yeah, there's a gap on the day here and here. So we've got a double gap. Could be a bigger magnet. We could be headed back down to the $15 territory. We did take advantage of the drop down today at the lows to buy back a couple of our call contracts we sold. Bought them back for $5. Not a big deal. Just wanted to get out of them. That way we could use them to flip to another contract, not just have to wait till the 15th for those to expire. So this tomorrow, possibly sell some for this week. Maybe sell 1 or 2 for next week. Just watch to see where price action goes, because again, if we go back to the day chart, we could just be filling this gap. Who knows if we make, kind of like a double bottom before we bounce. That's still in the realm of possibility, although we are in this daily downtrend now. So oops, let's get the right type of line here. We are in this daily downtrend high off a higher high, so can expect more downward movement, possibly even down to this 15 area. But the first gap close would be a good bounce point, or a point to try and make a higher low on the week perspective. If we want to, before we get into the notes for our triggers and targets for tomorrow, let's go ahead and just look at the broken down view so people can see exactly exactly what happened. Because unless you were even on like a 5 minute, even a 5 minute was in a way risky to get in on the put, right? Unless you were just going to go straight off of the news of the economic numbers that were released, because we did get the push up. So yesterday this would have been considered a higher low. We pushed up, made a higher high. We came down when we did bounce up here to make the initially this 3 was a 2 up before it went 3, right? So this was a higher low on the 5 minute, and I believe on the 15 minute. We'll check the 15 minute as well, but there was a higher low on the 15 once this went 2 up. Now then it went 3 down. It was right under opening print, so if you wanted to put a little bit more risk on the table, you could have bought a put right here, right? It was at not only opening print it rejected under, but it rejected under last week's 50%. This monthly broadening formation. Let's bring it out a little bit to something a little bit more clear. All right, so if we're just looking at our 4-hour markers, it rejected off of the overnight high, came back, tried to retest opening print, rejected there, but we still had previous high a day, the trigger for the 4-hour to the upside, as well as over low here. Not to mention, if we look at the 15 and the 1-hour, we had not made a lower high yet, right? So there was still a chance that we put in the lower high. So here's the 15-minute. Our clue could have been here that this was because this was a broadening formation, right? This was a lower low, and then it made a higher high. So lower low, higher high creates a broadening formation. We hit the top of the broadening formation. This was an inverted hammer / shooter, but it was green, so you got to kind of still play it by ear. You could have had a Momo shooter. So we didn't enter puts here. Long story short, if you did, kudos to you. You were willing to fight through the support that we had out there. We just didn't want to take the risk of going back through the chop of yesterday. Right now, once again, the 5-minute, even on the 5-minute, it only gave you one opportunity to get in. It was here. You never had any lower highs to the bottom. And so at that point, you got to kind of put your hands up and say, I missed out. I mean, you could jump in at some point here, but at that point you are technically, chasing. So if it did bounce, on this broadening formation or the weak flip or anything like that, it could have went back up, and then you would have been out of, pretty out of luck, because technically your stop should be up here, somewhere a little bit above the lower high. So that would be a lot of room for you to have to give up, premium before you would get stopped out. And before you would find out if you're going to, reject off of the opening print once again. So kudos to you again if you did that. We didn't. Again, we got stopped out of the calls that we got. What did we do? I think we must have been on the 1 minute. But either way, we got calls early in the morning. We got stopped out at even, so nothing lost, nothing gained, no harm, no foul. Initially, we were, okay with the push up as well, because, the swings that we have were kind of gaining back, but that dropped away pretty quickly. And, down at the bottom, then, you're just looking for a lower high. We did enter puts on the lower high on the 15 right here. But we ended up getting stopped out for even basic. Well, no, it was a slight loss. It was a slight loss because we got in down here when it triggered the lower high once we went 2 down here, locking in the lower high. It went against us, and we stopped out just above this lower high. Didn't participate in the upside because, again, didn't want to. I mean, we had some thin structure retracement here, but yesterday's move was such a slow grind, we didn't really want to get into it. And you could see how, we did get that pop, but then it pulled back, popped again, but there wasn't a whole lot of movement the rest of the day, at least in SOXL. So again, we closed below the week flip, so the week is red once again, but we're still above the quarter and the month flip. So again, it's just going to be a battle. We still haven't chose which direction price action is going to take us. Although it is leaning puts, I personally, I'm ready to put my put hat on, right? Because we do have the lower high. Like I said, I'm looking to sell calls tomorrow as well. So I will be entering puts. Just knowing, keeping in the back of my mind, we could create a higher low here, a double bottom, off the top of this gap. And just being aware that I might want to get out around this area and reassess any bounce. If we bounce and then do get a lower high, okay, then I'm back in, especially for the gap close, buying September, October puts to see if maybe we can make the lower low on the week, go test this weekly uptrend line, maybe even close this gap now that we're in the daily downtrend line, or downtrend line, we're in a daily downtrend. Tomorrow, definitely starting tomorrow, I'm more willing to put my put hat on. AMD doesn't help this situation for bulls either. So, again, nothing, small loss today, not a big deal. Overall average, it's not going to hurt us that much at all. We've got too many other things that are going for us. We do have the puts again for our August monthly, and we've got calls we can sell on top of buying puts starting tomorrow. So still in good shape. Again, still kind of in a range. Not we've started the daily downtrend. It's given more than just what we had before, where it was just this lower high. We've got the lower low and the lower high again. So kind of time to flip to bear mode for the time being. But we will stay alert for anything, because anything can go, and that kind of leads us into our notes for tomorrow, our triggers and targets. So what we'll do is we'll get in here on here, and we will mark out the triggers and targets for tomorrow. All right, let's get rid of today's opening print because we won't need that tomorrow. So we can see here that we've got yesterday's high. Oops. Previous high of day. We will move to today's high of day. The trigger to the upside on the 4 hour will move to the high of the second 4 hour of today. The trigger to the downside, and again, if you're not familiar with these 4 hour markers that we use, check out the link in the description to our precision trading video, and it'll lay it all out for you. It's really quite simple. So we just laid out like this. Rules are, under opening print, you start to look at puts. Over opening print, you start to look at calls. Say we open here, our first target, if we produce some type of higher low on a small time frame, would be the 4 hour trigger to the upside, or the overnight low. In this case, might be the overnight high. Next target would be the previous high a day, and then we could move on to our extended targets. But it gives us a real clear picture of triggers and targets for scalps and kind of day trades as well, to get precision entries and exits for the best risk reward, right? So again, go check out those videos if you haven't watched them. But now that we've got those marked, let's go ahead and set up our notes. So let's duplicate notes. System's running a little slow. What's going on here? All right, so that will be Wednesday, August 6th. And tomorrow there will be 100 trading days left in the year. These notes are from August 5th, and we have a closing price of $24.52. All right, so $24.52. I don't know, why is the week flip not filled in? So we have the week flip at $24.59. Oops. 24.59. And this is actually green because we're red on the week. So let's just mark it green. So we know that this week goes green at 24.59. The month goes red at 23.57. The quarter goes red at 24.38. We can see that's real close there. And we're still red on the year, which goes green at 28.13. We've got our week's expected move at $3, which tops us out at 27.08 and bought the low of 21.08. Again, that's just the market maker's expected move. That doesn't mean we can't go outside of that range in the week, but that's just a general guide for initially looking at the market. We've got our gaps above here listed, and we've got our gaps below listed. So let's go ahead and get into the 4-hour triggers and targets. Let's look to the downside first. Today was a 3 and then followed by a 1 on the 4-hour. So we've got a red 3, red 1, red 3, red 1, and then a 2 down would trigger at the low of this 1, which is 24.40. And then the magnitude would be the low of this candle, which is 23.61. So we'd have a 3, 1, 2 down, triggering at the low of this 1, targeting the low of this 3, which again is 23.61. 23.61 is our magnitude. So we can have some extended targets out there. 23.61. I'm going to go ahead and bring out a couple of markers that will indicate the what am I trying to get? Yeah, so this gives us last month's low right here at this 23.58, last year's low at this 23.50 flat. So we'd probably break through those. I would say the next target would be the top of this gap, and which is last week's low, 22.57. So let's go ahead and mark that on our 22.57. And the next extended target would be the close of the gap, which would be 21.98. All right, so we have a really clear picture tomorrow from the 4-hour perspective. If we break below the low of the second 4-hour of today's price action, then we're targeting the low of yesterday's price action overall. If we go below that, we have extended targets of the low of last week, as well as the close of the gap. All right. So let's go ahead and do our triggers and targets to the upside. So this would be a red 3, red 1, red 1, 2 up. So this would trigger at the high of this candle, which is 24.95. 24.95 is our trigger, with the magnitude of the high of this candle, which is 25.68. And I just realized I'm on the wrong chart, so you can't visualize the 4-hour markers. So there's our 4-hour markers. So we trigger here at this gray dashed line, which is the high of this, and our magnitude is this orange solid line, which is previous high of day. Now let's get our extended triggers and targets. We'll pull the chart back out that I was just looking at, and we can see last month's 50% is this 26.04. So we use that as one extended target, 26.04, and we'll use the high of this candle as another target, so that's 26.74. So we've already got that there, and we've got our higher high, which now would be this 25.68. So that's a magnet for price action. And the next high is 28.13. Yeah, 28.13 up here. So that would be the next real magnet for real price action. So since we had a strat reversal, right, on both the upside and downside, doesn't matter really what side, but a strat reversal on the 4-hour, the magnitude will always be the trigger for the 1 day, right? So since we had a strat on both the upside and downside, we can move these magnitudes to the triggers for the day. We'll go ahead and bring up our day chart. All right. And we can see that if we trigger the day, that will be a 3-2 down on the day chart. So this is red 3, oops, red 3, 2 down. Trigger being this 2361. Because there's not, it's not a strat reversal here. It's just continuation. This 3-2 down. It's not a three bar reversal. We don't have a magnitude. We just have a target, extended target. So 2361, 2361, 2257, and then the gap close would be our extended targets, right? So we'll just keep those. All right, and we have our lower low of 2028. This is 2257, and there's our 2028. So we have our lower low here of 2257. That will be another magnet for price action. We just take note of it there, and then we move on to the day to the upside. So to the upside, it would just be a red 3-2 up, triggering at this 2568, which is the magnitude of the 4-hour strat reversal. Again, that's not a 3-bar reversal here, so we'll take out the magnitude and just give it some targets. First target would be 2604, which is last month's 50%. And the second target would be the high of this candle, which would be 2674. So again, 2674, only about $1 away from 2568, the trigger. But you have to keep in mind that it doesn't take a lot for a big percentage move in SOXL. Right now, it is down less than $1 in after hours, which is minus 2.5%, right? So just like $1, it's down like $1.08, $1.75, which comes out to $2.50. I'm sorry, $2.57% that it's down, just less than $1. So just keep in mind that while it does kind of look like a smaller move on just pure numbers, if we look at the percentage move that is for the underlying price, we know that it's a pretty decent move. So if we look at things on the week perspective, we don't need to move the trigger because we haven't gone below 2257 and we haven't gone below above 2816. Right, so we still are yet to trigger anything on the week. The month triggers the 2 up, 2 down at 2358. While it did trigger it earlier this month, we're still above it at we're at 2452 was the closing price. Triggers 2358, so we're still above it. So we have that underlined notifying us that it has been triggered, but it's not in force right now. The quarter did trigger a 2 down, 2 up, but that is in force at 2584, and again we're at 2452. So again, it's just underlined to let us know, hey, we did trigger that at one point, but it's not in force. The year, we're very close to falling back into a 1, 2 up, 2 down on the year, which is another one of my favorite strat reversals. That triggers at 2350, right? It already triggered once, and it did meet the initial target that we had set out there. Because the magnitude of the move was so low, this 621, we had an initial target of 919 out there. It actually hit that. We purchased a lot of shares there. We bought some leaps there. But that on that April 7th drop, when we did get there, it did not quite reach its magnitude. So if we do get back below 2350, we're back in force. And if we get some momentum, I don't know. We seeing that 621 would be pretty crazy, but we could go see it. If we do, I hope you have some cash, still stashed away, or sitting in a bond, or a 4-week T-bill or something that you can have access to here. If you see a larger downtrend triggering, to kind of get ready to make a bigger move to the upside, right? At the very least, buying shares so that you can sell options contracts on those. If not, buying 2027 leaps, right? At that point, I think June 27 leaps may be available. So I'll be looking to, if we make another dive like that, I'll be looking for June 26 or even 2028 contracts to buy for SOXL. It worked very well for us on the April 7 low. It, worked at other dips for us. So even if you get a bounce, a dead cat bounce or a reasonable bounce before pushing back lower, you can get some good gains out of those. And then if we get the bounce and it continues to bounce, you've already got your foot in the door in some longer term contracts. So again, we've talked about this before. We were looking for some downward movement. The continued push up was nice for the mid and long term swings that we have, but when it got to short term, it did get a little bit tougher, about 3 weeks ago when we were getting to those highs, because you're chasing highs at that point without any really reasonable pullback. As we had mentioned previously, up to 2 weeks ago, we had 7 straight green weeks in a row for SOXL. So we this pullback is not the end of the world. It's actually quite, if not expected, in our case, kind of wanted, right? We'd like to get better entries for more long-term contracts. Maybe roll some of our other contracts that we already do have to even longer-term ones, especially if things get really bullish, because we know that we have seasonality right now that we're running up against. August, September, October, seasonally the worst for technology. August not quite as bad as September, October, but if we're starting to go into that seasonality pullback, then expect a little bit more here, and just be ready to sell calls and buy puts, and let's continue to make money. Admittedly, this week has been a little bit slower on the realized gain side of things. But the main thing is the swings that we have while the price is moving sideways are still in good shape on both ends, right? Because we've got September calls are the shortest term that we have left for calls. So we've got September and then June 26 and June 2027 calls. But the puts that we have are for August 15th. And again, like I mentioned, we'll be looking for September and October puts tomorrow if we get some more of this continue to push down. I'm not sure, what would really pop us up a whole bunch overnight, other than some good news or something like, some good news pertaining to like chip tariffs and chips and things of that nature. But I think those were kind of squashed today by some of what Trump was saying. So just keep in mind that we could get this bigger push down, and just be ready for it. We've gone over our triggers and targets. We have them. If you don't remember them, go ahead and rewind the video and go back over them. But yeah, just concentrate on having a good day tomorrow, making some realized gains tomorrow, and continuing on through the week, especially if we're going to have a bigger push down, right? Just really position ourselves for the bigger move, right? So I hope everybody enjoyed tonight's video. If you did, go ahead and hit the like button. Again, it really helps us grow. And if you have any comments, if you agree with our commentary, if you have anything that you see in the charts that we're not seeing, let us know. We'd be glad to know. I'm always open to other ideas, and I'd never want to get blindsided, so I'm always open to anyone's opinion. Let's have some respectful dialogue in the comments, and for everyone else, get some good rest tonight. Just get prepared for tomorrow's trade, and yeah, good luck.